Good morning, everybody. It's Monday, December 23rd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I will be sure to get to it during the show. Overnight markets here had March corn up a penny and 3/4 at 448. March soybeans were down 2 1/2 at 976 3/4, and March Chicago wheat was up 2 1/4 at 535 1/4. This morning, we had a couple of export sales announcements. 132,000 metric tons of corn to unknown destinations for 24. Also announced 132,000 metric tons of soybeans to China, also for 24. Good morning, guys. Hope everybody had a great weekend. A lot of news there late Friday into the weekend. Government shutdown was avoided. Got an extension of the Farm Bill, the 2018 Farm Bill. Looks like we got about $10 billion in economic aid for the farmers. So those Farm Act payments look to be on their way out. What I'm hearing this morning is within 90 days or so, they're going to get that taken care of. So a nice jump start to the new year for folks out there. One thing I did see this morning, it did exclude the provision on the E15 year-round allowance fuel side. So that'll be interesting to see how that takes shape. Outside of that, Argentine forecast, I know we were looking at hot and dry there for the near term on Friday. Looks like got a little bit wetter this morning than Friday's forecast. Could be partially responsible for a little bit of our late sell-off here this morning. But the U.S. dollar continues to uptick, and that's going to just be unfriendly to the real. So, Dustin, with that, maybe give us a few thoughts as we start this Christmas week, and then we'll throw it around the room.
Yeah, thanks, Dan. I think the currency is still going to be a biggest, mover here. The Brazilian, equity markets valued in dollars have certainly suffered from this as well. And it's literally tick for tick. You come in from the overnight, you see some strength in beans. I think without the real falling, we were set to open higher today. But we still have that as our primary albatross holding the market back. As we go through Christmas, I think the biggest thing to kind of consider is where our prices are, for incentives for production, which acres are going to get planted. I know corn has done really well against beans, new crop corn in the last couple of months. And we saw this, or last couple of weeks, especially, we saw this in the COT report as well. Managed money funds have been getting longer corn, or at least holding their corn length, and then adding some bean shorts in recent days. So that big drop in the ratio where beans have started to fall relative to corn, that showed up on the investment side as well, and it makes sense given the currency moves. And the market's still trying to incentivize the right acres. In this process, though, they're going through a disincentive of planting beans. That number needs to be quite a bit lower, though. That disincentive needs to be quite a bit stronger when flat price is low, in our opinion. As you get into loan renewal season and the plans for acres finalize, I still think there's a bit of a stretch there to think that we're going to go back to 93, 94 million acres of corn when we've got, losses projected as much as we do. Things pop up, how many acres go prevent plant if weather's not perfect? Are there any other underlying circumstances that change that as we go into the spring weather-wise? So I'm like I said, I'm kind of letting the market do its thing right now, and we'll see where we go.
Yeah, Dustin, it's good points. Our friends at Bourbon Brown down in Brazil there had a question. We did see a pop in meal on Friday, largely attributed to maybe that drier Argentine forecast, or what's your thoughts there?
Yeah, I think I think that's a big part of it for sure. Whenever we have any sort of concern out of Argentina, meal seems to perform well over oil. We're right at that 40% oil share mark too, and that's this is after having a good stretch there in October, November of strong oil, weak meal. So I'm not exactly sure, but it feels like there's one of the two is definitely a punching bag when the funds get on. So, and we're right by that psychological 40% oil share number again. So perhaps that would be part of it, along with the Argentinian weather.
Oh, very good. Ben, what's on your mind here this morning as we kick off the week?
Coming into the last week of trade this week and in a couple of days next week before we hit the new year, the long corn, short bean, short wheat trade has worked really well for the people that have stayed with it. And, beans and wheat are trading in a lower range than they were when we came into the week last week in both products. Corn continues to tread water in the same range. Put my tinfoil hat on for a minute. I guess I could see a case where maybe this gets put out in their favor into the end of the year. And then we got to deal with a whole new set of variables come early January with January 12th report and then the new administration, which, I've mentioned to customers that I feel like I could get pretty friendly corn if it wasn't for the fears that come along with the new administration and what may come out of the president-elect's mouth between now and then. Because over the weekend, there's some pretty crazy stuff, talking about taking back the Panama Canal and things like that. So you just don't know what those risks are to the agricultural markets. And I think you got to put that front and center, because it kind of becomes the wild, wild west to a certain degree from now until we get March off the board and we figure out what spring price looks like.
Yeah, that's very good. Jace, what's your thoughts on the corn market? I mean, kind of the same deal. Like, you could paint a friendly picture out forward.
Yeah, I agree with Ben and Dustin. We're so tightly tied to the currency moves, the strong dollar and the weak real, not affecting corn as much. Yeah, right? It's like looking out forward, new administration, we had Jan report. I think the world numbers in corn are really friendly. And I think we hold a lot of that corn here domestically, and we're using it. But, if something changes and the world needs our corn, you could definitely paint, a really strong bull market in corn for the next year. So, to be determined. So I lean friendly corn, wait and see type of attitude. But yeah, I don't have much to add to that. I agree with Dustin on new crop stuff, right? The battle for acres. It's like the battle for acres, on how low can one go versus the other, right? It's very strange. And the market is trying to, seems like, disincentivize acres. And that's really hard to do. I don't know how many people I've talked to say, how can we even do that?
Right.
It seems like there's always somebody to step in. If an acre goes, it's not going to go unplanted, right? So it's a struggle that we've talked about for years of, if we really need to cut production back, how does that happen?
Well, yeah, I would agree with that. I think there is something to be said, though. Like, if conditions are not great, you will see more of the fringe acres go sit fallow, right? Like the number of prevent plant acres that showed up in 2020, that was the ultimate price disincentive. And, it's there definitely obviously has to be some sort of plausible deniability to have an acre go prevent plant. They can't just choose to do that. But generally is the case. We often have, inclement weather through the spring time frame. And I think price incentives are one of the strongest things that are often overlooked. And look at 2019. We had 20 million prevent plant acres that year, yet we had more corn acres than the prior year. Right. And why was that? Because for the first time in a while, we had a price, some price excitement on corn. We were spiking into the 450s, 460s during the majority of that planting window. And people planted more than half the crop, in June, basically.
And what's interesting about that, Dustin? It's funny you bring that up. I had a conversation the other day. Knowing what we know now, if that scenario were to happen again, they will plant later. They will go after it and plant corn. Yeah, there were some guys that weren't quite sure about how that was going to play out. They'd keep planting.
Yeah, I don't know. I agree with that for sure. And because it's like a lot of people looked at the final outcome of that and said, oh, we had a pretty good year, but it wasn't really until a year and a half later we realized how bad of a year it was. It was, the January 2021 stocks count before we finally started to revert that average crop down. And that was one of the first kind of nail in the coffin for questioning the stocks reports as well, that, they're reducing such a large quantity after the stocks count was already over. For the September 2020 count was revised in 2021. But, I think, and I also think that like for a lot of the problems that came up, for some of those Illinois guys that had, quality discounts and things like that, like it ended up being a kind of not the best deal. I think in some cases, the guys that took Prevent Plant came out ahead. But
so your point is that with low price and with the right incentive to put acres into Prevent Plant, like they can't just do it, but if there's even a chance that they can, right, with some adverse weather.
I think when you're looking at, well over $150 an acre loss to start and the wind out of everyone's sails, I don't know the wind is out of everyone's sails right now, but I think that if we're talking about a price drop going into it, now maybe there's some things that we're not thinking about with Farm Bill and, the need to have a certified acre to receive it. But in 2020 is a good example, right? The price just completely fell out of bed, and we had an outsized large Prevent Plant year when weather was suspect. It wasn't like 2019, that was for sure. But 2019, it's just such a good example of like how quickly people can shift and go and plant. So that's the other thing too, is that if corn wants to rise above $5 between now and spring, you're gonna get a ton of corn acres, no question.
No doubt.
And I don't know that the ratio necessarily needs to do most of that work at that point, because we're coming off of a heavy bean year. So there's some limitations too prior to that planting window of how far things can go before you get a good incentive to overproduce in the U.S. again. But we have a lot to go into. We have 10% stocks to use for total corn available outside of China. For you look at the WASD numbers and just take the Chinese numbers out. They literally print this number in the world section for this reason. 10% stocks to use ratio, lowest since 2012. Wheat stocks to use, 19.1%, lowest since 07-08. We are in a completely different world for prices valued in dollars from those years. And part of it is because our South American friends are such good producers now that they're taking over a lot of this global production, global exports. But that's the thing. We still don't have a safrinha corn crop planted yet, let alone harvested and known that it's going to be another good crop. To me, it looks like there's not much weather premium built into corn in particular. And at the tightest since 2012, any hiccup in that crop, and you're off to the races, because that's like an April-May timeframe. And can we convince those corn acres to be 94 million again in that timeframe? I think if there's anything I believe that looks underpriced, it might be the chances for market to move, which is implied volatility, right? Implied volatility is still like 22% for December corn, but it's really low for like your spring new crop short-dated months. When, in my opinion, to Ben's point, there's a lot of wacky stuff that can happen between now and then. And we don't know, geopolitically that is. We don't know what that is. And so, you're starting to think about things that you're like, everyone's looking for premium right now. It's like, oh, well, can I sell an accumulator for so I can try to get towards profitability? We do all those things. One of two things could happen with accumulators. You get knocked out, you don't have any hedge, or you get doubled up because the narrative changed and maybe we inked a phase 2 trade deal or something happened with South American crop. And now you're doubled up at a price point you don't want. So I think that when I say let the chips fall where they may a little bit, that's kind of like there's a lot to be figured out here. And I can't have a really strong opinion about the market right now, just me personally, my opinion.
Yeah, I think that's fair. And you got the thin holiday markets for the next 2 weeks. The way that the holidays fall this week, it's kind of the same deal. We're going to pause in the middle and figure it out and go into the weekend, so it's going to be a little bit slower here. Ryland, we're coming into the open, looking at Friday's cattle on feed, pretty neutral. What's your thoughts to start the week?
Yeah, so I mean, I think that was the focus going in, and generally, everything was kind of right in line with what the trade was expecting. On feed, pretty much right at right around 100. Placements at 96, and marketing's 99. So, I mean, I think that just kind of coming into this session, market's probably going to focus on the near-term factors like cash, how the beef performs, but also you got the holiday week, so it just feels like there's going to be money moving around regardless. I don't think the report is really going to change psychology of just what's going on right now. So the focus is just going to be on cash for the beginning of the week. We do have the hog and pig report and the cold storage report out at 2:00. Markets just kind of overall expecting just kind of higher across the board for all hogs, kept for breeding, market hogs. And we'll see where the revisions are, just to see if there's justification for where we're at right now and if the market really needs to correct. But overall, we'll just kind of wait and see what the data says.
Very good. Appreciate the update there. We just came into the open here. We got March corn up about a penny here. 447.5 is the last. March soybeans are down a penny at 978.25, and March Chicago wheat is up 2.5 at 535.5. A couple things to point out here. We will have an early close tomorrow. So we got full markets today. Early close tomorrow, 12:05 Central. We'll have no markets on Wednesday for Christmas. And then we'll have a hard open on Thursday at 8:30 Central Time. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and subscribe. It'll keep you up to speed on everything AgYield. And again, thanks to everybody that participates each day. We certainly appreciate that. So every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a good start to the week, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.